Hey everybody. Let's see. There we go. Trying something new today because I'm gonna have an interview today as part of the stream. So I guess the poll Friday, red or green? Yeah, we didn't have the green, so let's see. Let's try a new poll. Start the poll. All right. Hey everybody. Morning. I do have an interview today, so this will be different. I've got different stuff going on in the background. When she shows up, I'll bring her on and do the interview. How's that sound? But until we get there, let's talk about what happened Friday, shall we? You know, they say a smooth sea never made a skilled sailor. Well, if that's the case, we're about to become master mariners because the waters of Wall Street starting to look less like a placid lake and more like a scene from the perfect storm, at least on Friday. All started with a tweet, possibly, or should I just say a truth post. Now, just when we were getting comfortable patting ourselves on the back, the market seemed to defy gravity. We just kept hovering, kept going higher despite all my warnings that we were going to pull back. Our president decided to play his favorite tune, the Tariff Tango. A few hundred characters, a threat of a massive new tariff escalation on China, and poof, $2 trillion of market value evaporated like that. It was like it's a magic trick, only instead of a rabbit, a giant pile of money disappeared out of the market. Now, mainstream media will tell you it's just a temporary blip, No big deal. Knee jerk reaction. Everything's okay. Late night social media posts, we'll see. Everybody's saying buy the dip, stay the course. And you know what? Maybe they're right. Maybe we rip right back higher. But what if they're not? What if this isn't just a passing squall and this is just the first blip and today's a dead cat bounce and then we get an earthquake that rips this baby wide open? Just think about it. Let's talk about something less glamorous than tech stocks and trade wars. Let's talk about foreclosures. Now, while everybody was glued to their screens watching the NASDAQ take one of the biggest nosedives we've had since Liberation Day, a little noticed report from Atom Data Solutions revealed that foreclosure filings in the third quarter rose 17% from last year. One in every 1,402 homes in America is now in some stage of foreclosure. In Florida, that's 1 in 814. Now, I'm no mathematician here, but those kind of numbers remind me of what we saw in 2008. And here's where it gets interesting. The average time it takes to foreclose a property has dropped by 25%. The banks are getting faster. Their AI overlords helping them get the paperwork pushed. It's like they're cleaning the decks, preparing for something else. But what might they be preparing for? This is where our story takes a little turn to the dark and murky side of private credit. You see, for the past decade, while interest rates were at rock bottom, a whole new shadow banking system has emerged. Private credit funds, flush with cash from yield hungry investors, have been lending to companies that traditional banks wouldn't touch with a 10-foot pole. It's a $1.6 trillion market, everybody. This is it's unregulated. It's kind of like the Wild West of weird finance. And now we're starting to see the first signs of trouble in this market. A little known auto parts supplier called First Brands, a company I doubt you've really heard of, just went bankrupt right on the back of Tricolor. And in the process, $2.3 billion of the creditors' money vaporized, gone, poof. And who were those creditors? You might know these names like Jeffries, UBS, and They now have to explain to their shareholders why they took a $2.3 billion loss, how they managed to lose hundreds of millions of dollars on a company that makes oil filters. And this, my friends, is what we call a credit hiccup. And the last thing, or maybe the thing about credit hiccups is they have a nasty habit of expanding and cascading across sectors we never saw it coming. Starts with just a company or two, and then another one, and then the losses pile up, and the banks get scared, and then they start pulling back lending, and they have to cover losses, and the house of cards comes down. It starts in unknown places. I mean, we saw this back in the financial crisis. Lehman Brothers just poof up and gone. Enron just poof up and gone. And then the whole thing, the whole house of cards just came down. You know, when credit dries up, the whole system kind of grinds to a halt for a while. And what does that mean for you, the savvy investors paying attention, following me? Well, it's time to be smart, time to be nimble, watch out, keep your protection in place. It's time to look for opportunities that always arise during turmoil. First, let's talk about the obvious. Gold is ripping. I mean, the shiny yellow metal that has been a safe haven for investors for thousands of years is responding crazily right now. In fact, central banks have more gold now on the rolls than they have US treasuries for the first time since like the 80s. They've had treasuries on their books in larger quantities than gold, and that just flipped. Flip back to gold being the major hedge for central banks across the world, not so much treasuries. As the financial system gets shakier, gold gets more attractive to a lot of individuals and a lot of groups, a lot of big money. It's kind of like the ultimate insurance policy against absolute chaos globally. Now, second, let's talk about volatility. The VIX, so-called fear index, if you got into the UVXY trade back a couple weeks ago when I talked about it, well, it cashed out on Friday. Nice 50+% gain. It wasn't, 2, 3, 400%, but hey, it did its job. I closed it out. Lots of others did too. It worked. Now, time to reset on this bounce. Look for a new one, longer term, November, December, probably November because the IV term structure just doesn't make sense, but we'll cover that in a minute. On Friday, VIX woke up with a vengeance. And for those with the stomach for it, there's ways to trade volatility and profit from the wild swings in the market. But be warned, it's kind of like trading crypto. Volatility is, I always say that crypto is the most volatile sector in the market, but volatility is the most volatile thing in the market, period. I did make large six-figure number trading VIX during COVID. It's my goal to make it on the next collapse, whatever it is. And finally, let's talk about the credit markets themselves. As the saying goes, the time to buy is when there's blood in the streets. And right now, there's just a trickle of blood in the private credit market. For those that do your homework, there's going to be opportunity to pick up distressed assets on the cheap. It's a risky game, high risk, high reward. The reward can be absolutely windfall, change your life kind of money. Look, I'm not here to tell you that the sky's falling, but there's cracks in the foundation. The cracks keep getting bigger. Easy money's been made. The next few months, potentially a test of our skill, discipline, and our nerve. Be careful. I've talked about this. We're in a debt bubble, a credit bubble, if you want to call it that. There's a reckoning coming. Be careful. With Tricolor and this new one that virtually nobody's heard of, well, these two defaults, these two bankruptcies, what's next? Is it Carvana? This First Brands and Tricolor, is Carvana at risk? They, look at them. Do they write a lot of their own loans or do they pass it off? If they are taking on the loans and they're subprime, I haven't dove into it much. Maybe I'll ask AI later today to do the research for me. So be careful. We'll talk about how we can potentially make some money today. Because all trading involves a substantial risk of loss, past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. That's basically all financial instruments in case it went too fast. And if you want somebody to tell you what to do, hire and consult a financial advisor. Make sure you trust them. And Jack was like, can we just take that off of there? Be careful out there. It's your money. Oh, I got something I got to take care of here. Market's open. I got a margin call. Let's see. Make sure I'm in the right account here. Gotta do some damage control. Margin call is not nearly as big as it was last night. Let's see what we got here. And so I'm gonna get rid of this right here. Got rid of that. And dang, look at all those. Partial fill, partial fill, partial fill. Back to the positions. Now I've got to get rid of this guy. Except I can't do 12, or I got to do 12. And that should clear my margin call. Yep, all cleared up. So that's how you do it, right there. Sell the shares, sell the puts. Cleared up my margin call. Hopefully that helps, Donald. I know you no concern. Hey, Brandon, thanks for being a channel subscriber, or channel member, excuse me. If you want to chat on the stream, become a subscriber. Welcome, everybody. Looks like we got Goose in the house, Donald in the poll. Yeah, nice. Mostly expecting green. Start a new poll. Anybody catch some VIX money on the poll on the drop? Yeah, Friday was bad. I mean, it was rough. But check this out. Check this out. Still doing pretty good. It's my all-time history right here. Looked at some wins. Gap put options. Got put those shares. TSLL. Got put those shares. TSLL. Got put those shares. TSLL. Got put those shares. So I have 600 of TSLL. I have 900. Yeah, 900 gap. And these call options went out for 0. I'll sell some more upside calls this week for Chewy. Look at that. I was at 40.50 right there. Let's go check out the chart. Oh, I just traded something else. Huh. I don't know. I'm not sure what else I just traded. Look at this. I was at 40.50 right there. And we're going green, baby. This is a setup for big upside potential. I'm going to wait to sell those on Chewy. That'd be great to see that breakout. This is the pattern right here. It has not activated, right? There's the high. This is the roadmap bounce pattern. Here's the low right here. Up to the danger zone. Did not close above the 618. Retraced. Coming back up. This is classic. We get a double bounce off the roadmap line. Get that move. Activates this target. 51. And my cost basis is pretty nice right now. That's what I would say. Pretty nice. So there we There we go. All right. Let's see. See what some comment. See, usually I have my comments here, but today they're further over here. So I have to look a little further over. And let's see. What's amazing? First brands loans were secured. But it's not first branches, it's first brands. So Goose. And GLD. Did that maybe GLD just cashed out? Let's double check that. Maybe that was what the no, mine's only at 27%. I'm gonna close this right there, I think. Hold on. Yeah, I'm gonna close the working. So I did a spread on GLD. Usually I just buy a long call for part of the Gold Rush trade. I did a spread, and now that spread's dropping out. So, of course, there. Close that. Spread wasn't quite 50% profit. Maybe I ought to close the long. I'm just going to close the long too. Let's go ahead and do that here at the open. Let's bring this baby over. See how this? I just closed the spread, which if you want to see it right there, I closed it for 65 cents. I got it for 55 cents. So not bad, almost 20%. Go ahead and close this baby too. I've already got the order on. I have to find the order. All right. There we go. Close that out. All right, off the gold. So how we doing? That's a long way to recover right here. I don't know if we can do it. I don't think we can do it today. I just, that's a long way up to, this may come back to the bottom. ES has got a nice bounce going though. So let's talk about lower time frame, what we got cooking here. This may be the bottom, but we may do a 618 retrace here because that's the first move down, retrace. Yeah. Check this out. First move down, retrace. Another move down, 618 retrace. The market dropped out 60 points after the close. Look at that. If you didn't know, ES dropped on down almost 60 points after we closed out on Friday. We closed right there. We got down to here, 60, like 61 points. Look at that. What the heck? That was nutty as a. But this looks like a giant. The way this formed up. That was 3 waves. That was 3 waves. That was 5 waves. ABC. That was a giant ABC. It's a giant correction. This sets the stage for going higher. So this low, very important here. Set your alerts down here, 65.50. If we push below that, odds are we're getting continuation. If we stay above it, we're probably going to new all-time highs. This is wild and crazy. And look where we stopped overnight. 618 retrace. Now, if we get that and then we pop through, here's the targets. 68.51, 68.86. These are ES futures numbers, not cash index. Slightly different. We don't have the overnight action on the cash index, so we can't do this projection the same way. Now, that low, this high. Here's the possible downside today. And if we do that, sets up, watch this. Look at this. 1, 2, 3, confluence is right there. We could be right back up there in a couple days. Isn't that nutty? It's crazy how this all works. That's kind of a roadmap for where we might be heading. Let me know in the chat what you think about that. It's just wild to me. Absolutely wild to me. We've got a lot of tickers on the list today. I mean, so market bottom on a Friday. We don't usually make the lowest low on a Friday, but we also don't usually flush out almost 100 points after market closes. Was that a final flush out? Now, cash index wise, we could go revisit the bottom. We could come back down here, make a lower low in the cash, but that be a higher low on ES because of how far down we went and didn't reflect that in the cash. See, this puts us, look where the 618 is. The 618 is right down where the close was. This could dip back down, make the lower low in cash, and still go higher, and it completes both patterns. This is the craziest. It's wild. So be careful. We might see more downside today. May go back. This could be a dead cat bounce. And we go back down, hit the bottom again. That's what they call it when we just bounce up and come right back down. See, NASDAQ flushed out like 250 points after the close. See this last candle here? This is where the market closed. NASDAQ flushed 280 points. I think the actual close was right there. Like 250 points. And we popped just slightly and then flushed down and down. Absolute bananas, nuts. Now, if you had done that, I talked about that NASDAQ trade. If you had done it right at 2 p.m. when we were, let's see, where was it? Friday. Where's Friday at 2 p.m.? Friday at 2 p.m. No, down here. Yeah. Way down here. If you had done this Friday, 2 p.m., right here, the trade I talked about on Friday morning, you would have been way down here. And I did it on this pop, and I actually got in trouble slightly. Took a little bit of loss. Now, had you done it right at 2 p.m., you would have been down and stuck to the numbers I gave you. Sell the one for $2, buy one down. You would have come in just out of the money on this final flush into the close. It was nuts. Absolute nuts. But it still worked. I went a little more bold and beautiful and got myself in trouble. So didn't take big loss. I mean, it was just a risk a small amount. I'll make some more. I'll make it back. Russell. Let's go check her out. This one. So I've been commenting how this didn't match the pattern. And look at that. We talked about that Friday, like how that looked like an A. This looks like a B triangle. And there's the C. So this can go shooting back up. We're still due a date with 2600 right up here. We'll see what happens. I'm going to leave those spreads on because I'll leave the rest of them on. See what happens. Worst getting happen, I take the loss. Got out of the margin call, but this is not far away from 246 is my short on this. And in case you're wondering what this is, what I'm talking about, it's the new cash bot thing that I've been talking about. I got into one that was on Friday, and well, I got put some of the shares. So, c'est la vie, such is life. Just the way it happens. I had to get myself out of the margin call that happened from getting put the shares, and It's not really a big deal. It's just one trade. And it didn't wreck anything because it was just the max risk. Like, out the max risk, no big deal. Move on. So, which platform are you using here? There. Be more specific. To place trades, that's Tasty Trade. That's if you're asking what. Tasty Trade, right there. They have a web version too. So, if you're asking about what platform I'm drawing on, that's TradingView. The logo's behind me, I guess. So, there's like 250. Look at that. There's like 200 and something stocks that were bouncing this morning. Absolute bananas. No real damage done in the markets. CLS, a big winner. Look at that. It went from being down here to gapping up. Crazy. TSLL got put those shares. I think my average cost is 20. I had 2150s, 2050s, 1950s. And maybe it's, and then all the credit. So my average cost is like 20. I'll be able to sell some upside calls on that. Not bad. Gap. Yeah, baby. My average cost here is like 20 also. And no damage. No real damage to anything. All looks a-okay to me. This one's crazy. Hymns. On Friday, I sold puts at 16. I think it was 16. Got paid like 60 cents for 1 week from 10/17. 60 cents a piece for these way down here. This is forking crazy, man. I've gotten feedback that people want to see more trades and less just me generally talking about the market. So let's talk about it. Yeah, look at this. It's starting to drop out now, but I mean, look at that. It's going to be highly profitable. Now, if I get put these, look at the nuts. Look at the nuts premium here. I can sell some upside premium. Look at that banana premium there for 1 month out. I'm hoping I get put these things. If I don't get put them, I'm probably going to roll out here a month and sell another big chunk for $3. I mean, that's if you do a chunk of 10, which is what I did, that's $3,000 on a $16,000 risk for a month. Look at this craziness. Like, let me pull up the calculator. 3 divided by 16. It's 18% return in a month. Times 12. That's 225% a year. That's wild premium right there. Now, why would obviously HIMS is dangerous, blah 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 blah. But the underlying has a bullish pattern. Look at this. Look at this wind up. Move up, retrace, move up, retrace, move up. If we break out, this thing has a large upside potential right here. You'd be like, well, I don't believe it's going to break out, but I like this pattern. Potential to go up here to about 100. Maybe not, but there's potential. Maybe just 85, but still. Look at the percentage here. 56% upside. That's 100% on HIMS with a Z. 100% upside here. Yeah, I was just going for like 58% upside here, 36. But if we got 100% upside from the current price, roughly 41. Just buy shares here. I mean, it's wild, right? Absolute wild. the premium that's available. I can't believe it. So absolutely cute, absolutely bananas. Anyway, trying to do more trading. I've not historically been good at trading while doing a live show because I like to think about what I'm doing more. I'm more methodical. So historically, I haven't really traded live in front of people, but I'm trying to do that more. I'll ease into it, if you will. So bear with me. Let's see if there are any other opportunities. Now, there were two things on the list that were set up for the pattern today, and that one looks like absolute garbage. But we'll talk about it anyway. Here's the high, here's the low, there's the entry. High above, down below. There's the candle close above. 34.68 is the target. This pattern. Yeah, it's already in the trade from back here. The high, the low. So it's already looking for the bounce. So this is just a secondary sub bounce. 31 trades, 67, 1. A little lighter than historical average. The average, this is statistically significant with 30 trades. That's what we're looking for. This number here is below the 74.8% historical average of this pattern. So that number's below, so it underperforms. And this number is below the 1.25 profit factor that's the average across pretty much everything. So caution chasing that one. And then another equally not awesome one right here. I mean, the market was beat down Friday, so not a lot of opportunities showed up. Not a lot showed up on the roadmap line for the week either. If you don't have the orange line, that's the roadmap line. This line back here. Click the link, go to the channel homepage. The video that plays automatically on the page is the code and everything for the roadmap line. And if you're just like, dude, I don't like code. I don't know what code. I don't know. I'm not going to mess with code. I don't want to learn code. I'm an old dog. Don't want to learn new tricks. That's cool. Links in the description. It's like $5. You click the easy button, put it on your chart. No big deal. I have it for, Thinkorswim and all sorts of stuff. So that not significant, even though it has a giant profit factor. This may or may not work. Historically, we have to go back to the average, which is 75% and 1.2. And there's the target right there at 24. All right. There's the two setups right there. Moving on. My guest should be here in a minute. Let's look for some other opportunities. Well, we skipped the Mag 7s. Let's go back and hit those. Let's hit the highlights. Hit some of the other big stuff here. Looky, looky, looky. We're almost there. Not far away now. Black gold getting whacked. Flush it on out, baby. Now, this is be careful. This is a crash type setup in oil. This is a 1-2, 1-2, 1-2. This is a nested setup for a quick flush, and then we grind out the bottom. Now, it could just be quick flush, and then we're all clear. Missiles fly, we go higher. But this is setting up for an outsized drop. If you don't have SCO exposure, might consider adding it. That is a ticker that goes up when oil goes down, and it just hit the, we talked about that, last week? 2 weeks ago. 2 weeks ago that fired off, and it just hit the target. 2 weeks ago that was the entry, and we just hit the target. Gold, ramping, Bitcoin. Now we got down into a dangerous spot here. This pretty much voided everything we had on the chart for bullishness, unfortunately. Now, it's interesting that we hit that target there before we did this flush out. We got down to a danger zone. But look at that. It was exactly in this target. So we hit the upside target that was here, and then we hit the downside target that was here. This is weirding me out a little bit. We're bouncing off all these targets. So really, this looks like it was one big correction across here. Because that was just 1, 2, 3 up, and then we did this flush. The question is this complete? And it may not be. 1, 2, 3, 4. Watch this area. If we don't break above that, we're going to take one more trip down here, probably to a lower low. Right there. Probably down to a lower low. That will be pretty crazy. Pretty crazy. Checking to make sure my special guest wasn't messaging me here. Ethereum. Well, can't say I didn't warn you. There's 3,500 touch. Sometimes I get lucky. Holy. I don't even believe that. Like, quite honestly, that's one of those just freaks me out. I talked about that since back here in August. Anybody remember that? Anybody? I mean, you can let me know in the chat. Like, everybody remember I talked about it since August? I've been saying 3,500, 3,500, 3,500, 3,500, and dang. Creepy, man. Creepy. And now maybe that was enough to be all clear, right? That was sloppy price action, but maybe that's good enough. Some altcoins out there got hit like 90% pullbacks. So this was a massive liquidation in crypto. And what's funny is it was blamed on the Trump tweet thing, but it's actually more sinister than that. This was a coordinated liquidation event that just happened to correspond with the market flush out. Maybe it was related. Maybe the crypto flush out caused the market flush out to be worse. But what's interesting is that Binance, a few days ago, a couple weeks ago, announced that they figured out that there was a problem in their leverage calculations and in the way that they handle it. And they were going to be implementing a fix in a week or so or two. And almost perfectly right in the middle between when they announced it and when they're going to implement the fix, Friday happened, and somebody exploited Binance's leverage system to cause an outsized pullback liquidation event in crypto. Isn't that eerily odd? And everybody's talking about this trader that magically shorted right hyperliquid right when and then closed it right at the bottom. But this was bigger than that. This was a coordinated effort. That was just a big trade that was happening, but this was a coordinated effort that took place on Binance, and then it had ripple effects through every other exchange because of the arbitration between exchanges. Kind of crazy. So Binance is scheduled to fix that another week or so, but damage is already done. The money's already gone. There's no undoing Friday's flush out. There's no putting it all back. So absolutely just kind of wild. Absolutely just kind of wild. I just, these are the shenanigans that go on in the background that us normal people have no chance. I have a feeling that it started out as like a scheme, like, hey, let's try to make a few $1 million, and it worked so good. It wiped the leverage traders clean out of the market trading crypto. Pretty much every leverage position got wiped clean on Friday. It was like a $30 billion liquidation. So, and nobody's gonna know who it was. Like the big trader that showed up, that so they were an OG Bitcoin buyer, Satoshi era trader, had 86,000 Bitcoin in their wallet. They sold off like 20,000 Bitcoins, took that money, went over, opened an account at Hyperliquid, shorted $1.1 billion worth of Bitcoin and Ethereum, closed it out right at the bottom on Friday, made like $200 million. And then they added a new short this morning with just a measly 160 million. Everybody's like, I saw social media blowing up about it, but it was only $160 million additional short. And it's like no big deal. No big deal. So my guest should be here any minute now. Make sure, double check, make sure everything's okay. Oh my goodness, a bunch of alerts firing off. So, all right. This is crazy, the stuff that goes on in the background. So I have a feeling that it was just somebody with a scheme, and the scheme worked. And it worked so good that they were just like, dang. I have a feeling it was spread out. It was probably a few individuals, but they blew out Binance's leverage system, and it cascaded through pretty much everything else. Just wild. That's the shenanigans that go on out here. That's the kind of shenanigans. So, is this an all clear? I don't know. Bitcoin still suggests that we might go lower. Global liquidity, that was a big flush. And guess what? We retested the breakout once again and right back down. Now we're set to go higher. I have a feeling like this is JT's big kind of prediction here, is that we haven't experienced the actual blow off top yet. While everything's been frothy and crazy high, I've been saying there's a pullback coming, brewing. We haven't done like this exponential final suck in move yet. And maybe this was enough flush out that this now happens. Maybe now we do some sort of breathtakingly swift upside move that sucks everybody's money in before a bigger crash. It's all possible. It's all possible. Let me check on my guest. Let's see. Let's see. Make sure that the link I gave them is still the same link to get in. Let me. It changed the link. Awesome. Let me pop this over. Get that. Oh. Let's see. All right, she'll be here in a second. And that was my fault. I did something and voided the link. All right. Apple. Well, I was warning we might see that pullback. We might go back to the roadmap line. Amazon, sit on the roadmap line. If we get through it, watch out to the downside. Google, just being frothy here. And probably going to retest that fib line. Meta, sitting on the roadmap line. And Microsoft, probably going to pull back to the roadmap line. NVIDIA, probably going to ramp on up to that 216, 212, 216 targets. Tesla recovering today. Wasn't really that bad on Friday. Still set for a bigger pop. And Netflix grinding in here at that 618 retrace. Do we go higher? Do we go lower? Not so sure. So let me pop my guest onto the stage here. Hey, Jody, welcome.
Is my mic on?
Yeah, you are. Hey, good. I can hear you just fine.
Jeffrey.
Hey,
yeah.
It's good to see you.
Yes, it's exciting to be here. Amazing. Yeah, you have such a great show. You have such a great following. Jeffrey is amazing.
These are all my followers. They don't know who you are though. Jody taught me a lot about Elliott Wave, and I thought I would have her on the show and kind of do a little interview here, and just give everybody more information about what it is I do and how I learned how to do it, and that's pretty cool. So Jody, you have a pretty fascinating background. At least I've been pretty fascinated about it. Kind of getting your start as a trader at a major bank, and now running Wavy Tunnel Pro and teaching people Elliott Wave theory. Can you just kind of tell us about your journey? How did you get started trading and get into doing this? What led to this transition to teaching people?
Absolutely. My journey started a long time ago on Wall Street and Bay Street, First Wall Street. I traded currencies for JP Morgan as an interbank trader. I traded the British pound down from 240 to 105 back up to the 150s. And that's how I marked my time in New York, actually, with where the British pound went. It was really fast-paced and intense. I managed large positions that generated millions for the bank. And that's actually when I was first introduced to Elliott Wave analysis. JP Morgan brought in an analyst from the Chicago Board of Trade who taught our desk how to apply Elliott waves to market behavior. He actually sat on the desk and said, be careful, we're in a wave 3, we're going up or we're going down. I already felt the rhythm of the market as an interbank trader. Excuse me. Especially those powerful third waves of momentum. You could feel it because suddenly all of the banks would be calling for prices, the corporates would be calling, the central banks would be calling. But Elliott Wave theory gave me the structure to explain what I'd been feeling intuitively. And then after leaving JP Morgan, I traded 20 different futures markets over a 2-year period. I shared office space with my husband, and my favorites were coffee and cocoa, because they had, I don't know, I could relate to their rhythm and their movement. And back then I was paying well over $1,000 a month for data and charts. So you really had to love the markets.
Yeah, what do you think about that? What do you think about that move on cocoa lately? I mean, it's just absolutely bananas.
Yeah, it's very volatile. Yeah, it's crazy. Yeah, exactly. So eventually I realized my passion was teaching others about the same structure and the rhythm and Elliott wave analysis. And that's what led me to create the FX Trader's Edge and develop the Wavy Tunnel Pro system, which I'm going to be offering next week.
All right. Well, for those not familiar with Elliott Wave, can we break this down in kind of simple forms, and how does it differ from other forms of technical analysis?
Yeah, sure. So I like to look at Elliott wave theory as looking at the market context. It's really about understanding the natural rhythm of the markets. It's based on price action, really. And the idea that prices move in repeating cycles, the markets are fractal. So that means that the patterns repeat themselves over and over and over again, no matter what you trade, no matter what time frame you trade. If you're a day trader trading futures, or if you're trading stocks, swing trading, you're going to see the same patterns repeat. And these patterns reflect human behavior. So optimism, fear, greed, and everything in between. Um, in simple terms, your clients know markets don't move in straight lines. They move in waves of progress and correction. I mean, look what we
Yeah.
saw on Friday and then the correction today. So Elliott wave maps those patterns, and when you can identify where you are in the market cycle, then you can go down to any time frame and trade it. But I like using Elliott wave as the market map, the big perspective, to get the context. And
All right.
that's how it differs from other forms of technical analysis. I mean, I use technical analysis as well, obviously.
Yeah. So, you said you got started at JP Morgan. How did Elliott Wave really give you an edge in that institutional environment?
Oh my gosh. Um, being in the trenches, like quoting prices all day long from the time the market opened to the other bank traders. I was the only female British pound trader among the major banks at the time, and the British pound was they were all major currencies, but everything happened so fast. We had to quote prices, manage large positions, and we didn't want, if the market was moving up, I knew that I couldn't be short. So I could be taken, dealt on by all of the other banks, and I could find myself short. But with Elliott wave analysis, if I knew that we were in a wave 3 going up, then I had to just be proactive and go out and buy so that I had my supply when I would be when the banks or the corporates would take what I had. So I had to recognize when we were in a strong trend, when we were in a sideways market. I could relax during a sideways market. I didn't have to be so proactive. I could be more defensive, less defensive. I could make decisions on my own. But when we were in a strong move, I had to be very proactive.
All right.
So I played both defense and offense.
Well, that sounds like it could be beneficial for everybody. And my audience, I do use concepts of Elliott Wave. I've kind of distilled it down. But how do you think understanding Elliott Wave deeply really complements your ability to perform in the market?
Yeah, well, that's why I created the Wavy Tunnel Pro system, using a bunch of moving averages that mimic the 8-wave market map. So the trend and the correction. So when traders know that we are in a trend move, you're going to buy on the dips. When the market is exhausted and running out of steam, and there are ways that we can do it, we use oscillators, we use the awesome oscillator, and we look for divergence at the top of the market. And when we have that, the Wavy Tunnel Pro tells us where the market can correct to on a deep retracement, like we had on Friday. And because the Fibonacci-based averages that I use in the Wavy Tunnel Pro system mimic the 8-wave market cycle. And now, granted, that's that's ideal, because sometimes the trend moves go on and on and on, like we've seen in the indices. But that's what we teach, how to anticipate an extended move and not to fight the trend, but to be nimble enough to ride the trend, but know when we're wrong, when the trend is ending. And there are other things that we use, that help traders, like trend line breaks at the market tops and bottoms. That's really important. And also adding layers of support and resistance. That's really important. And of course, I mentioned the oscillators to let you know when the market is waning, running out of steam. So that's how the Wavy Tunnel Pro enhances traditional Elliott wave analysis. It adds structure, timing, and context, so traders can trade with more clarity, because traders need clarity, and they need several confirmations, from my experience.
Yeah. So, Elliott Wave is, it's a form of technical analysis based in Fibonacci, but it's really all based on human behavior and our emotions that drive the market. How do you think learning this helps you anticipate the emotional well-being of the market and, the way traders react?
Do you want me to share something with you? Can
Yeah,
I
you can
share
if you want
something?
to. Yeah.
Yeah, let me just
if you want to pull something onto the.
Pull something up. Yeah. Let me just show you the market map. Let me just see how I can
You should be able to
do this.
present. There's a little button down there to be able to share your screen.
Yeah. Okay. Let me move this out of the way so that I can see my. Okay. I am going to share my screen because this really explains it. I just want to show the market map.
Yeah.
Slideshow from current slide. I just have this slide. Now, how can I share?
Should be the button on the bottom of the interface there. It's got the little screen with the plus.
Okay. Okay, which screen is it going to show?
I'm not sure. That's the thing with multiple screens. But
oh, yeah, I think.
If you can share it, I'll bring it over onto the stream. Yeah, so
Okay.
for those that don't know, Elliott wave is 5 impulsive waves. When we're trending, we usually get 5-wave structure, and then we get a 3-wave corrective. When she talks about the 8 waves cycle, she's talking about those 5 impulsives and the 3 pullbacks, and that kind of completes a cycle in Elliott wave.
Yeah, and okay. Okay.
Did you get it to pop up there yet?
Do you see it?
Not yet.
Oh, the dashboard. It's showing the dashboard. Okay. It's on that screen. Is it on this screen?
I'm not seeing it on my panel yet to be able to add it to the stream.
No. Okay. Oh, it's showing. Okay. Okay. I see what I have to do. Sorry about this. I just thought it would be easy to share a screen and.
Oh, you're fine. Like, I think everybody, let me know in the chat if you're enjoying this so far. Yeah, Jody does use several screens.
Here, no, I do. I have 3 screens, but here, let me just show.
There we go. I'll bring this onto the stage. And
do you see it?
Oh, add to the stage. There we go.
Do you
there.
See this, right?
Yep.
Yeah. Okay, and I'm just. Okay, so what I want to show is this 8-wave market cycle. It's really, really cool. So Jeffrey, you asked me about the emotions that occur in the markets, and this depicts it. So you have the 8-wave market cycle, the trend move, and trend moves are usually wrapped in, you have channel lines here around the trend. And sometimes trends can be longer. You can go from 5 waves to 9 waves to 13 waves. They usually up in 4, and we teach all this in the program. And then you have the top of the market. And this is where the traders get greedy. There's a lot of optimism and exuberance. We call it point T. And they tend to load up. And this is a time where we have to change our brain and take profits or sell. Like Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful. That's a typical contrarian. And I have to remind myself about this all the time, because I'm a fairly emotional person, and I have to look at this market map. And then the market trades off in an A wave, and Jeffrey's talking about ABCs all the time. And then we retrace for a B, and then we have a major sell-off, which is characterized by fear and panic and discouragement, and traders tend to bail down here. And this is one of my favorite setups. It's called the breakout 4, which is the wave 5 move, preparing for the wave 5 move. And there have been several. We have a scanner which finds the end of wave C, and there have been several lately. So some examples are Netflix. Netflix came up on the scanner. Philip Morris came up on the scanner. CME came up on the scanner. So many came up on the scanner at this point over the last week or so. So this is how the emotions tie in to the Elliott waves.
And that move on Friday, I think it kind of looks like a C wave that caused a lot of that fear too. So we'll see how this actually plays out. But it definitely kind of fit with that market map you got right there.
Oh my gosh, are you kidding me? Absolutely. And then selling off further. Oh my gosh. You think the market was fearful? There was no, when you don't see a reprieve at all, and it just keeps dropping. I mean, that's this. Traders are bailing, they're hedging, that's this.
Now, you
Okay.
work with a lot of traders. I mean, you teach this to people. What are some of the common pitfalls and mistakes that early learners of Elliott Wave kind of make when they try to start applying this?
Yeah, that's a great question. Um, when traders start applying it, they want to get all of the they they try to label every little move. Um, they want every squiggle to fit into a perfect wave count, and that's not going to happen. I mean, it's just not. The goal isn't perfection, it's recognizing the overall rhythm of impulsive moves, the trend moves, and the corrections. Another big pitfall is ignoring the bigger picture, like this, ignoring the context, jumping into a trade without checking the higher time frames. And that's not going to do it. I mean, I understand if you're going to be day trading, you're just going to be looking at the smaller time frame, but it's important to know what the big picture is. So that's some of the mistakes that traders make as well. And then of course, bias can creep in. So a trader might get stuck to their view that, oh, the market is going to go down. It's moved up too far too fast. It's going to go
I'm
down.
guilty. I'm guilty.
Yeah. Right. So it's important to be nimble and flexible and to have a mechanism for when it does start to go down, like even breaking below, well, in our system, the Wavy Tunnel Pro, breaking below the filter and then breaking below the wave. And then, so you need some kind of a trigger for when we do start to correct and
And I
know
know,
when we're going to stop.
and my roadmap line does borrow from your tunnel, and they are very related. And I do thank you for letting me use those and show it off. I use it a little bit different way, but we are very related in some of the stuff we do, because it's all based in Elliott Wave, really. Um,
Absolutely.
and you have this
This is
Elliott
it.
Wave course starting very
Yeah.
soon. And who is that designed for? Who can benefit from taking your course?
Yeah. Experienced traders and newbies. I mean, it's really a comprehensive program. We start with Elliott Wave analysis, and then we go on to the strategy, the Wavy Tunnel Pro strategy. This is it, by the way. You see how the Wavy Tunnel Pro mimics the 8-wave market cycle. This is ideal. This is beautiful. This is where we see divergence, and then we have an ABC correction down to the tunnel, and most often we go below the tunnel. This is just beautiful. And so we start with Elliott wave analysis, move into Fibonacci. Obviously, it's related. And then we look at the Wavy Tunnel Pro and all of the setups. There's so many setups. We have trend line breaks. We have, and then we move into harmonics. And experienced traders that have been trading the markets for 5, 10, 15, 20, 25 years have taken this program, and they've just, most people have said that it's really changed the way they look at the markets. And then newbies just starting out, oh my gosh, it's just an eye opener. And it really, I think this is the be all and end all. What can I say?
I took a consult with you when we first met, and you were like, "Holy cow, Jeff, you're catching these wave threes and you don't even know it." And she's like, "I can help you get better at doing that." And that's what she really told me. And I've gone on to do some really big, bold predictions in the market. So if people wanted to join you and learn more about all this stuff, how can they do that?
So they can go to wavytunnelpro.com. They can call me not call me, email me at jody@fxtradersedge.com if they have any questions, jody@fxtradersedge.com. But go to wavytunnelpro.com, and that's where you will see the program. We're starting it October 19th. It's a 5-day accelerated training and trading program. And it's mapped out over the course of the 5 days. All of the the course material is already in the website, and I meet for the coaching like 3 or 4 times a day just to keep people on track to go through the material and to highlight certain important things and to look at the current markets and see how it applies. We have a forum and we have a community, and it's just a great education. And if you're working with Jeffrey, I mean, it would really add value to what he's doing, because you'll know how he thinks using his Elliott wave lens, right? I mean, you'll
Yeah.
understand Jeffrey better.
Mm.
And that's the bottom line. You'll be able to understand all the positions that he talks about, and when he draws his Fibonacci lines on the charts, you'll be able to know how to do that yourself. I mean, it'll just be wonderful for those that are working with Jeffrey
Yeah,
in his
I don't spend the
community.
time to teach Elliott Wave because there's so many great educators like you that do a better job, I feel like. I just take advantage of a few very repeatable patterns inside Elliott Wave over and over, but be able to put yourself in the position where you can recognize them. That's what Jody really helps people do, I feel like. And when I took this course from you, Jody, it was like, what, 6 weeks, 10 weeks? I'm really excited you've got an accelerated program to get people on the ground running faster than you did before. So I've dropped the link in the chat. I've got the link in the description down below. If you are having trouble finding this, maybe you're watching it later and you don't see the chat. So both of those are out there. If you want to come join Jody, she's getting started in just a few days. Just a few days.
Yeah,
And
Sunday.
Jody, I want to thank you for being on here with us today. I'm going to wrap up the stream. Thanks for coming, everybody. Have a great day. Be careful out there trading. Our bias for the day is caution. We're making a bottom, and we can still dip again. We might not have the bottom in place yet. We'll see.
Thank
Have a
you
great day,
so
everybody.
much, Jeffrey.
Yeah.
Thanks, everyone.
Thank you.
Okay.
Bye.
Okay, bye.